Hello everyone, my name is Michael Lamott. I am the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. And the reason why is because we can. So often we're told that we can't take advantage of the stock market, that it's too hard, that it takes too much time, that we're better off taking our money and putting it in some kind of a mutual fund or letting somebody else manage it for it. I say bull. I believe that we can do it, that it's a lot easier than the pros would have us think. And the reason why is because I'm doing it and I'm doing it part-time, and it's a matter of figuring out what to buy, when to buy it, how much, and all that. So we put together this video series and other video series as well, but this one is about what to buy. So one of the things that I like to look for when I buy a stock is, does this stock have accelerating earnings and accelerating sales? The reason why I'm interested in those kinds of things is, number one, because those are some of the things that the biggest stocks in history have had prior to them making their big moves. In recent history, we can even see this. So we could see this in stocks like Facebook, in Amazon, Google, Alibaba, all these stocks, all these big companies that have gone on to make 100, 200, 500, 1,000% gains, that they've had accelerating earnings, accelerating sales, and it makes sense, right? It makes sense that if a company keeps on making more money and selling more things, that company should be worth more, and therefore its stock price should be worth more. So if we focus on stocks that fit that mold, then that gives us a much better chance of landing one of these big winners. So the way that I try to focus my attention, I'll scan for these stocks. And you could set up scans for accelerating earnings and accelerating sales through your broker, through all different kinds of free software out there. To make life a bit easier, I created my own scanner, ChartYourTrade MRI. It scans for this, it scans for other things. We have all of the definitions of our scans listed out in this blog post, how to scan for the best growth stocks. It's a great post. Check it out. I like it quite a bit. I find it helpful to refer back to it. So go back, read that, and you'll see what we scan for accelerating earnings, accelerating sales. So let's take a look at the ChartYourTrade MRI stock scanner and see what it's turned up this week. ChartYourTrade MRI has this double filtration ability. So it's running one scan, right? So it'll run our accelerating earnings and accelerating sales scan, but it can also filter based on the qualities of an ideal growth stock. Now, we wrote all about what an ideal growth stock is too. You could go back and look at that on that how to scan for the best growth stocks post as well. But by doing that, we can really hone in on just the best of the best stocks out there in the market. So presently there's only 8 stocks that fit this criteria. And because this scan is based just on fundamental criteria, it may return stocks that are not ready to buy just yet, but it'll produce ones that we'll definitely want to keep on a special watch list, because these are candidates that have the ability, that are historically proven to have the ability to produce great runs. So if they're not setting up now, they may set up again in the future, and that would be an opportunity to buy them. So let's take a look at what we have here. Alarm.com. Let's see what this one's doing. This one right now, yeah, it's very, very much extended based on this chart here. It looks like it ran down and touched that 9-week moving average and reversed and bounced off of it. So In another recent video, we talked about the 50-day moving average on a weekly chart that corresponds to the 10-week moving average. And it's very important because you could see, and you could see it right here as well, that institutions come in and they support a stock at or around this magical 50-day moving average or 10-week moving average. And the reason why, it's anyone's guess, but that's the reason. Hedge funds and institutions, they love to use that particular line in the sand to support leading stock and support their positions. So therefore, because it happens again and again and again, it's something that we need to be cognizant of as well. And if we're mindful and we see a leading stock pulling into that kind of a moving average, it might be a good spot to take up a position because it could bounce from that level. And if it doesn't, then we know, okay, time to call it quits and exit that stock very quickly. So very low risk and potentially high reward. So anyway, not to get too far off topic, let's take a look at some of these other ones. Endeavor Logistics. Yeah, see now this one here, this one is one that's not setting up just yet. I mean, if you draw a downward trend line, it's nowhere near breaking above that kind of a resistance level. So this is one where I would keep it on a watch list, not do anything with it just yet, but still one that's may be of interest down the road. Coherent, this is a semiconductor, and this one doesn't look to be setting up in any kind of an actionable pattern right now either. We see that it kind of looks like it's forming a tapping pattern called a head and shoulders, where you have one, the shoulder over here, then it comes up again, and that's the head, and then the other shoulder, the right shoulder, is typically lower than the left shoulder, and that seems like it might be developing here, and you would have a neckline somewhere right around what appears to be the $208 level, or even if it breaks above this upward sloping trend line over here, I would look to sell the stock. Definitely might be a shorting opportunity, although I generally don't like to short stocks when we are in a strong bull market like we are, because for one, you're paddling against the stream, right? Like if the current is all moving upwards and we're trying to short, it'll be much easier to find stocks that are moving up than stocks that are going down. That's number one. And number two is that because because we are in a bull market, this could really, it could break down, but it could also end up reversing in our face a lot easier. So maybe keep it on some kind of a watch list, a potential shorting watch list. But yeah, for my personal preference is, if we're in a bull market, then I want to be long stocks. If we roll over and we turn into a bear market, that's when I'm going to start shorting stocks and look for more shorting opportunities. This might be a great shorting opportunity, but I'd much rather be long in a bull market. Next up, Five Below. Oops. Okay, Five Below. Let's zoom out on this one. This is a relatively recent IPO, and looking at this pattern here, it looks like it might be working on some kind of a cup-shaped base or base-on-base pattern over here. And if we draw a downward sloping trend line, I would probably look to maybe consider starting a position around the 51.74 level if it could break above that weekly high. For right now, the pattern might morph by the time you watch this video, but if this is a stock that I'm interested in, it is one that's setting up in a base pattern, and yeah, that one looks interesting to me. If it breaks above that level right here, then I would probably look to set my stop somewhere around the $46 level, right below this weekly low. So maybe 45.90. I like to keep my stop relatively tight when I'm looking at that kind of a trade. But let's move on. Here's another semiconductor, IPG Photonics. This one is very extended, as you can see. So not really offering a buying opportunity, but still one that we'd want to keep on a watch list just in case if it does pull back. It might be one that we would want to try to take advantage of. But while simultaneously being very mindful that this is a stock that has had a tremendous run already, and we would want to exit very quickly if it does start to move against us. Modine Manufacturing Company. This one is actually setting up in some kind of a flag pattern. Not quite sure where the entry is on this one yet. I think it needs a little bit more time to develop. Primoris Services Corporation. Let's see. This seems like it's forming, could be a cup with a high handle. I think this one needs a little bit more time to develop as well. Let's take a look at what it looks like on a daily chart. Maybe that'll give a little bit more clarity. Yeah, it seems like it needs a little bit more time to develop a level of support. Right now, today, it's testing this former high, and at the moment seems like it's getting support right around that level. I don't think I would trust it as a reversal just yet, but it's of interest. I would keep it on a watch list, but it's not one that I'm super excited about just yet. And then Super Microcomputer. Let's zoom out and see what this thing is doing. So this has been consolidating since 2015. And if we look at it, the chart pattern from left to right, notice how it's very wide and loose over here as it's consolidating and it's forming this downtrend. But more recently, from really the beginning of the year to now, the price action has gotten progressively tighter. That's something that you like to see because it shows a change in character in the stock, and it also shows that there is some accumulation here. So what I would do for this one, I would draw a downward trend line connecting those recent highs, and once Supermicro proves that it can continue going by breaking above that trend line, that would get me interested. And I would either look to maybe buy around there or wait for another consolidation, because when a stock breaks above those long-term downtrends, they typically break out and then they'll consolidate for a little while because the market is feeling out that new breakout, and then it'll go. So I would either look to buy that initial breakout, buy maybe a starter position, and then see if it consolidates a little bit more, and then look to add to it again. So it's getting there, not quite there yet, but definitely one that I would keep on a ready list. So that's it for these 8 stocks. And interestingly, let's sort this list and take a look and see which industry groups are popping up on here. So it's pretty diverse at this point. We have 2 semiconductors, and the other ones are just a mishmash of different stocks. And that doesn't really give us that much insight this week of to which companies are, or which industry groups are starting to heat up in producing greater earnings and greater sales, aside from the semiconductors, and that group has just been so hot in 2017. If you've been following the market at all, you'd know that semiconductors have been super hot, or really since like 2016. If you go back and look at the chart of the ETF that tracks Semiconductors. The ticker symbol is SMH. You'll see that chart has just been on this tremendous uptrend for what seems like forever. So these are all the kinds of things that enter my mind when I am hunting for stocks. And again, this is not what I do full time yet, but it's something that I got started in. It's something that I'm obviously very passionate about, and I want to show you just how simple it is. That it is challenging to trade stocks because we're trading against ourselves and our own minds and our own emotions, but that's what really makes it very difficult. But there's so many tools out there and services that make the stock market accessible, and we really can and we really should be taking advantage of the stock market, because this is going to be part of the ticket to financial freedom and doing the things that we really want to do in life. And it's going to be so important for our generation to learn how to do this, because retirement is not going to be the same. Social Security is not going to be the same as it was for our parents. So we really need to learn this stuff. And it's not as hard as Wall Street would have you believe. It's something that you could do at night, on the weekend, and once you learn the basics, it's not going to take you all that much time either. You could get any number of tools that are available. You could get any number of services to help you do the research if you don't have time for any of that, and you can really exponentially grow your wealth. So I really encourage you to sit down for a little while, watch some of these videos, watch other people's videos, get inspired, learn how to take advantage of the stock market, and secure your financial freedom. Thank you so much for watching this video. I truly hope that you got something out of it. If you have questions, please leave them in the comment section below and I will personally answer them. Thank you so much for watching. Please like this video and also subscribe to our channel so that way you get alerted when we do our next video. Thanks again for watching, and I will talk to you again very soon.